It comes in at just the time you don't need it, and it sucks out of the economy a negative wealth effect. And as
Jeremy, growth stocks have, over the course of the bull market, outperformed value stocks by almost 400 basis points. What if, after the bubble pops, growth is still ahead and there is no redemption for the value investor?
what happens if that happens? Then there'll be a lot of sad value managers. Now, the question is, will it happen? And it would be historically unprecedented were that to happen. I'm pretty certain it will not. However, having said that, let me say one thing about value. I have no confidence, and have not had any for over 20 years, in price to book and PE and price to cash flow, price to sales, even as a measure of true value. A measure of true value is the long-term discounted value of the future stream of dividends. A growth stock is, of course, worth a higher ratio of this, that, and the other than a low growth stock. But that doesn't mean they can't be overpriced. So value should be cheap for what you are. You should build in the growth, you should build in the quality, and if it's overpriced, it's overpriced. But to use a simple-minded measure of book is a crazy idea. A cheap book is the market's vote on the worst assets out there in the marketplace. The lowest PE is the market's vote on the worst earnings most likely to be overstated or downgraded. And the same with yield. It's the market's vote of the most likely to be cut. These have no business being a good indicator of future performance.
Besides cash and value and emerging market stocks, is there anywhere else for an investor to hide?
I'm also worried, by the way, about inflation. If you think you live in a world where output doesn't matter and you can just create paper, sooner or later you're going to do the impossible, and that is bring back inflation, that we haven't seen for 20 years. And you keep it up on a global basis, you will have inflation. And I can't help but notice that around the world, the commodity prices of all kinds, really, but particularly critical food and critical metals are going up. And if you have that happening, and you have a rapidly declining growth rate in the workforce towards zero and negative, you are really set up for this time is different. So we are not just in a bubble market, but we're looking at a global economy that is at an inflection point to turn down in long-term growth rate. So this is a bad time to be caught over speculating.
What is the right way to allocate, irrespective of the bubble? What is the right way to allocate in a world of zero rates, stimulus ad infinitum, declining productivity, the potential for inflation, and the list goes on?
Yeah, first of all, very difficult. And secondly, of course, diversify. It's always a huge advantage. And thirdly, amazingly, the low growth stocks in the emerging market world are perfectly reasonable. If you need to own stocks, and most people do, that would be a perfectly good way to go. And I also think shares that benefit from the greening of the economy will do much better than the rest. Anything to do with renewable energy, the electrification of the system, electric cars, etc. These are all going to have top-line revenues that dwarf the declining growth rate of the rest of the global economy. It will take trillions of dollars to decarbonize the global system. It will dominate everyone's portfolio. And if you have to own US stocks, they're the ones to own. And look around for a good climate change fund. I'm happy to say GMO has one. And they're doing very well now that the focus is clearly, finally, took 20 years to wake up, but in the last year, people really are beginning to understand the size of the problem and the need to move money into greening the economy.
Jeremy, you've invested in gold before. Do you see any promise, as a growing number of investors do, in Bitcoin or other forms of cryptocurrency?
What is the future value of the dividend stream of Bitcoin? I can tell you that. That doesn't take a prize-winning mathematician. It is nil. It will never pay you a dividend. If you're desperate, can you eat it? No, you can't. Its entire value is on the greater fool, is it not? So Bitcoin could be worth $1 million a unit if you can find someone to pay it.
So let me ask you this. Who or what do you hold most responsible for the excesses of the present mania?
Ironically, I'm tempted to say Alan Greenspan, only because he set us on this course of talking and acting along the lines of moral hazard. He bragged that he had contributed to the strength of the economy through the wealth effect. There is indeed a wealth effect. If you have the market double, 3 or 4% of that gets spent and helps the economy. He was right, and he bragged about it. And then following him, Bernanke bragged about that they had contributed to the health of the economy, and they have. And now the Fed also brags that it has done its part and it's helped encourage the economy through high asset prices. All of it's true. The bad news, however, is we live in a world that is, in the end, a real world of people and production. And in the end, therefore, despite Alan Greenspan's enormous willingness to create a new permanent golden era of productivity, et cetera, the S&P still came down 50%. The NASDAQ still burst and went down 82%, despite his fanatical interest in moral hazard and helping out stock market prices. The point is, they did not brag of the negative effect of the market mean reverting back to normal. It comes in at just the time you don't need it, and it sucks out of the economy a negative wealth effect, and as it will this time.